Right, good morning, good morning, good morning. So, welcome. Um, we got a little bit of a continuation in the sell-off this morning. Um, yeah, so let's see if we can continue, come down to the bottom of range. At the moment, we're kind of at a level of support, as you can kind of see. But the dollar index is holding on to that trend line. It is making a move up higher. Today, we're not getting a great deal of data. Okay. Um, we do get an FOMC minutes meeting today. So yeah, I don't. I mean, the same rhetoric is going to be followed up in the meeting. I assume. I don't think anything's going to really change. Maybe come in a little bit more hawkish because of the data that we have been getting. But again, I don't see anything out of the ordinary coming from it. Now we did get some German figures, CPI coming in above previous. That's kind of the main thing to really take from it. But yeah, apart from that, there really isn't much else in terms of data today. Okay, so see how things kind of play out. But yeah, I mean, yesterday we got left with a gap below. It pushed, well, kind of wicked up, came back down, and now we saw, well, we got a very strong green candle to the upside again. So we're at this kind of local level of support here, and we've ever so slightly breached it to the upside. So see whether we can get a continuation. It does look like it's a pretty strong kind of structure that we're building up on here. So hopefully we can get just a continuation, which should move crypto down. Okay, we have been holding this level of resistance for a while. Obviously, we got relatively nice kind of pullback. Okay, it is kind of struggling. It's not like an instant red day. But yeah, if you have a little look across the altcoin market, I mean, they're suffering across the board, as you can see. Red across the board. But yeah, we're at that 200. We're just tweeting in and around it. So let's see if we can get a nice push down to the bottom of the range, about 23,400. That would be nice. We are still seeing some very weak buy side. So yeah, it's a good chance that we could get that. Um, just have a little look. But yeah, I mean, as you can see, we are getting some increased sell side on the lower time frame. So hopefully we can get a continuation back down. That would be a lovely. Now oil closed a nice trade yesterday. It was a very nice trade. I think we pulled in something. Let me just double check on it. 46 pips on oil. Okay, was a nice move. We're at support again. Okay, so and I mean it's quite slow. We do get some API data today, so we might see a little bit of movement from the oil market today. But yeah, we'll keep a close eye on things. We're looking at ETHW to break through this trend line. As you can see, held this nice level of resistance, and now testing that that trend line. Okay, so hopefully we do get that break. If we do get a nice break, then yeah, this should start to crumble and move towards some of these levels of support. We got roughly about 2 levels to look at. So yeah, let's see what we can get. It's going to be relatively sluggish. I don't see it moving by extreme amounts. Tomorrow is your big day for data, really. Um, that's when we get the US data. So maybe a little bit of movement today, but majority of it is going to be tomorrow. So just bear that in mind if you're trading crypto. Yeah. So we'll look at gold, see what's happening here. Um, building upon some structure, there isn't much to go off. Yeah, it's not looking like we're getting a great deal of opportunity. What else have we got here? Yeah, it is really. I mean, we've got the FOMC meeting later on, but apart from that, it's a little bit more Asia market data. So we're pretty clear. I don't see huge moves happening. Yeah, there isn't much to really go off. So we'll keep our eye on oil. Really, I think that's the trade to look for today. I'm gonna. I mean, your FX markets. I mean, we've gotten the European data out, and the German CPI, the Italian CPI today. So I want to see if we can get continuation to the downside here on oil. That would be nice. As always, guys, feel free to message us in the chat with anything that you want us to go over, any questions. Yeah, we're more than happy to answer anything. I guess we're just going to have a little scouts around, see whether we can pick up on anything. Got this order block down here. That's where I'm looking at on a prices coming down to about 74.2 ish. That's where it's likely. Give us a decent trade there. Could very well get continuation here. Yesterday, the equity markets were actually down by a decent amount as well. Um, I mean, the Nasdaq is, tweeting below, whereas the S&P is relatively unchanged. But yeah, they are looking quite weak. Does look like the Nasdaq and the S&P could make a bit of a further move down. Could be the case that we could kind of at this level here. There's a little bit of a concentration of volume there. Got that 200. But yeah, it was a red day. A red day for the S&P and the Nasdaq yesterday. Bitcoin relatively holding, very slow movement for Bitcoin. Really isn't much in it. Um, yeah, we eventually got that break of that trend line. That obviously we spoke about in that update. But it was just very, very, very weak. Yeah, got that first breach, pushed straight back up, came back down, pushed back up, came back down. It's quite weak movement. But even the buy side here isn't showing too much signs of strength. We'll find something. We will find something. Just gotta be relatively patient. Mm-mm-mm-mm. Yeah, keep your eye on ETHW, okay, because if we start to move nicely to the downside, this is going to start to really move. Kind of held this level of resistance very nicely, um, showing some more signs of weakness. Yeah, even kind of a longer term trend going along there. Could get that break. Bitcoin's just building up on some nice little structure. But yeah, the dollar index is looking strong. It really is looking strong. Yeah, it came down and tested that trend line very, very well. Do quite like a short here. Alright, we're going to take a short on oil. See if we can play it nicely down. Continuation. We are looking for a move down to about 74.2 ish. That would be an ideal move. Can extend this a little bit. Yeah, let's see what we can get. And like I've said, crypto is going to move relatively slow today. I don't see it moving crazy. A lot of the movement's already been done. To that kind of to the downside, it's just going to build up on structure. Obviously, with the majority of data is coming out tomorrow. Okay, so we will get some movement on that New York Open. You might get a little bit of a continuation between now and that New York Open. Um, but yeah, markets aren't going to move too crazy. Hopefully, we can get just another leg down somewhere around this region. Let's see if we can get continuation down there. Do, 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 do. Building some structure on that lower time frame here. As always, guys, feel free to touch base with us in the chat. Ask us anything. We're here. So, Phantom yesterday that we were kind of keeping our eyes on for a nice trade to go to the long side. I mean, it broke down. It went straight back in structure, as you can see, basically down 10% for the day. So it saw a huge move back down. So yeah, it's going to take a little bit longer to warm up and set itself. Now we've breached that 200 on the 4 hour. It could still very easily move straight back up. We're still at structure. It's come down, tested this order block here. So yeah, we're still within positive structure here. So you could still very much continue moving to that upside until we kind of start moving towards 0.45, 0.443 ish. It's still upward trending. Yeah, I mean, the dollar is looking pretty strong here. It's going for that break again. Okay, what we're going to do is move our stop loss to break even here on oil. Okay, risk free already in literally a matter of a couple of minutes. So nice and quick. We'll see whether we can get that continuation towards 74.2 ish. Hopefully we can get that move down. That would be lovely. This is just it's crypto movement is just has been so slow, very slow. Alright, yeah, we're out at break even there. No need to mess around. Just see whether we can get something else. Can get rid of that. Beautiful. We could get a continuation to the downside here on the Nasdaq and on the S&P. I mean, we're already starting to see it, aren't we? Mm, decent amount of sell side as well. Yeah, that would be a nice move. Yeah. Yep. See if we can get an entry to go short, yeah. Keep an eye.
Does the regulation, though, around LDIs need to be changed now? The House of Lords Industry Regulators Committee has talked about this as well. Does there need to be regulatory change in the pension sector to ensure this sort of thing doesn't happen again?
Well, the regulator's job is to look at these types of incidents and events and decide whether the rules need to be tighter, better, more clearly defined. So I would expect them to be looking at it quite closely. They've certainly learned something from this crisis. And so, yes, I would certainly expect to see more coming out on that front.
Okay, interesting. Yeah, there's lots of discussion around whether there'll be a ban or severe restrictions on using a leveraged LDI in the UK in the future. So that's something we should think about. Also, though, I want to talk about how people that are signed up to Pension B are investing. You're talking about launching a new ESG fund or being more ethically minded when it comes to investing for pensioners in the UK. How are you going about doing this?
Well, a lot of our research has shown that consumers within UK pensions invest in
Okay, so we got hi sir, good morning. Good morning. I hope everything's well, going well for you. Thank you. I hope everything's going well for you too. What is the best leverage to use as a beginner? Okay, so as beginners, don't use anything over 20 times leverage. Okay, yeah, just the maximum leverage to use. Just stick to that 20 times leverage. Don't go anywhere above 20 times. Okay. The main problem with beginners, okay, it's the use of high leverage, okay, isn't bad if you're putting the correct amount of margin on a trade, right? So you can use 100 times leverage. You just have to put the right amount of margin to basically go hand in hand with the use of higher leverage. Okay, that's where where beginners go wrong. Okay, they will place the same margin that they would place on a trade using 20 times leverage, and using 100 times leverage, for instance. And that's where you just burn your whole account. So if you're using higher leverage, you need to compensate for the margin. So you need to bring your margin down. So yeah, as beginners, just stick to 20 times leverage because I mean, as beginners, also the main problem is your risk management. So you're not really looking at how much margin you're placing on a trade, which you really do have to. So yeah, stick to 20 times leverage and obviously control the amount of margin that you're placing on a trade. You don't want to be using. I mean, if you're opening more than one trade, okay, so you want to be risking between 3 to 5% realistically. Of your whole portfolio and compensate for a max loss. Okay, so the max loss in terms of, let's say you're planning out a trade, right? Your max loss is if prices go and hit your stop loss. So you need to calculate and understand, okay, what is your max loss, and that should be included in the 3 to 5% risk to your portfolio or to your wallet. Yeah, that's how you basically control and actually kind of reserve as much of your wallet as possible, because obviously you've got to expect losses. So yeah, no more than 20 times leverage. Stick to 20 times leverage. Do not go anywhere above that. Um, it also seeing those big percentage numbers. Okay, when things are going against you, you're going to make mistakes. You're going to either close the trade too early, and you're going to concentrate too much on that percentage figure. So 20 times leverage is nice and comfortable, and just get used to things, and then you can start kind of playing around and mixing things up in terms of a higher leverage, lower margin, and or even lower leverage and higher margin, for instance.
Protect workers over 50 not to retire too early. Do the rules need to be changed? And are you seeing big numbers of people who are invested with you
But
withdrawing
yeah, you really do
before the retirement age?
need to be careful. Just don't go over anywhere and anything above 20 times, and just keep it controlled in that sense.
retire. And so, as you'll know, the state pension
Ba, 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 ba,
making
ba.
it much harder for people to actually stop working. And so what we are seeing is customers continuing to work perhaps for longer than they were expecting. And so I actually think the great challenge we have is to make sure that people can afford their retirement. So I think we'll have to watch the space a bit more.
Romy Savova there, the CEO and founder of Pension B. It's a kind of macro across the
Really
board.
isn't a great deal.
Their equities.
Really isn't a great deal. I mean, this isn't looking too bad for a short. In fact, we are at obviously this kind of level of resistance here, which is quite nice. So we could actually be looking at a short here. Da, 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 da. Yeah, you got pretty good risk to reward ratio on this one as well. Just sets it just above.
Their order book's full and they need certainty that those order books are going to remain full. So I think this is one component of that, as well as just political stability, a few years of calm without kind of dealing with things like a global pandemic. All of those would be in the ingredients that would see business investment come back.
Any sense of the number on how much it would reduce?
It would be significant. I mean, in essence, the numbers are that UK business investment is about the same level that it was in 2016. The likes of France and Spain, those numbers are around 20% higher. So it would be really meaningful. And of course, with investment, then solves all the other economic ills that we have, which is low productivity, low real wages, fiscal drag. So it really is the secret sauce for attracting business investment. Okay. In terms of recession, though, bankers
Yeah, let's see what we can get. Let's see what we can get.
when we do get a recession. We had those strong PMI numbers out yesterday. Do you think that that is realistic, that we can avoid recession? Is there really something in the tank in the UK? Demand is proving extremely resilient. That is true. And some of that is because the risk of us running out of gas and having to ration gas across Europe, that risk has absolutely receded. Wholesale gas prices are falling. And so that is another support to consumer demand. Consumers have done a pretty good job of terming out their mortgages, and therefore that wasn't biting into consumer spending in the way that perhaps it did when interest rates were last at this level. I mean, it's going to eventually, but it's slower. So there is some resilience. I think, though, however, we have to ask ourselves the question, do we need a recession to get rid of inflation? Because that's the underlying problem. And that was the global issue. We came into this year with everyone predicting a recession globally because the central banks were saying to us, that's the price we have to pay to get rid of inflation. And unfortunately, whilst there's some tentative evidence that inflationary pressure, that need for a downturn, perhaps isn't quite so stark in the US, it's not clear to me in the UK that at all. We've still got wage growth accelerating, and therefore, sadly for the Bank of England, I think if the economy is really strong, is really resilient, and all that means is that unemployment's edging ever lower and wage growth is edging ever higher, well, then I'm afraid resilient data just means higher interest rates.
Yeah, and before the PMI data, I think you saw the BOE peak rate at 4.5%. Is that higher now?
I would say that still feels about right to me, but I certainly feel the risks are too higher rather than what the Bank of England, which told us at their last meeting, which was that they felt that lower interest rates, 4% or so, where they've already got to, would be enough. I don't think that's right. What do you think is going to happen in Europe then? Vilma de Gallo speaking this morning, talking about markets have overreacted since last Thursday. The ECB is not obliged to hike at every meeting up to September. Is that a surprisingly strong performance in terms of the European economy? Yeah, I mean, I think the ECB are in a slightly different position to the Fed and the Bank of England in that I think
Yeah, I should get a nice short on here, guys.
domestically generated
Euro Australian dollar.
obvious. So as long as headline inflation keeps coming down, which it looks like it will, thanks to food and thanks to energy.
Hi, I'm new here. Can you help me out? Yes, I can help you out. Yes. You can either message me in the chat or you can message me privately. Whichever way you want to do it, Abdul, you go for it.
Well, I think with these sort of geopolitical tail risks, they're very hard for investors to price in. I mean, if you have I mean, nuclear is the most obvious example. If we move towards such a tail risk, you know, there's going to be no place to hide. But you can't invest on 5% probability events or 10% probability events. You have to assume those things won't happen and therefore invest on your central scenarios, um, whilst also keeping an eye to check that they are 2%, 5%, and not growing risks.
Thank you so much. Very interesting. Thank you.
See whether we can hold on to this level of resistance. Make that push to the downside.
Chief market strategist for EMEA at Jefferies.
Coming up, we're going to be having Daybreak Europe. Sorry, Daybreak
Seeing some nice sell side.
Pascal and Nathan Hager. And Nathan Hager is on the line to tell us what's coming up in the program.
Wondering where I was. Good morning.
Well, we wish you were here, Nathan.
Oh, thanks.
But it's been quite the sell-off to
Oh,
start
I
the
know.
week.
Yeah, concern over rates seems to be taking hold in this market. Lizzie, good morning. It helped to fuel a 2% drop for the S&P and the Nasdaq yesterday, just as we were coming off from a federal holiday here in the U.S. And this morning, we're waiting to see if we get more clues
Yes. Yes to your question. Yes to your question.
saying 50 basis points should be on the table. Is that a view that is holding sway with members of the Fed who actually vote on policy?
Yes, the short is open. Yeah, euro, Australian dollar. Let's go. Let's chase it all the way down. Chasing it to that structure just here. So as soon as it hits, we're out. So let's see what we can get.
Conversation with the chief global equity strategist at Goldman Sachs, Peter Oppenheimer. His thoughts on whether we can get any upside to stocks when so much of the return right now is in the treasury market when you have so much possibility of further rate hikes. We'll get his thoughts from Goldman's Global Macro Conference, Asia Pacific in Hong Kong.
Now, we are coming up, though, to a year of the war in Ukraine. We were just speaking there to Karen Ward from JP Morgan Asset Management saying, look, you can't make decisions on a 2% or 5% tail risk. You have to just assume that the worst is not going to happen. But geopolitics is a very significant factor for markets.
Yeah, it's one of those potential headwinds that sort of runs with cross currents when you have many market participants feeling optimistic about the reopening of China, but at the same time, we're hearing real concern being voiced by many Western leaders that Chinese support for Russia could keep this conflict going for much longer. And of course, we're continuing to follow President Biden as he wraps up his trip through Eastern Europe. Of course, that dramatic visit to Kiev over the weekend. He's been casting this war as a fight for democracy against autocracy. It seems like both sides are bolstering themselves for the reopening.
Hopefully we can get that move.
Isn't going to end.
Yes, you can enter. Yes, you can enter.
The latest on it from Bloomberg's Rosalind Matheson, going to be joining us in a few minutes, as well as Bloomberg government reporter Emily Wilkins on where things stand in the war in Ukraine, what it could mean for investors.
This is a nice reaction. We're just currently coming back down to the structure here ever so slightly.
Front. The irony is that those who get paid to cut jobs are getting cut.
Yeah, how about this, Lizzie? We hear about all the layoffs in tech and financials. Now word that McKinsey, the headcount cutting masters, are planning one of their biggest staff reductions ever. We'll have more on what's behind that move. And we've been, of course, following another trend in the corporate sector, pay cuts for top executives. Well, at least one Wall Street CEO is bucking that trend. We'll tell you about Citigroup's Jane Fraser and her growing pay package in the minutes ahead here on Bloomberg Daybreak.
All right, thanks, Nathan Hager. Daybreak coming up.
Yeah, there really isn't too much happening on the crypto front.
Mariana Mazzucato, I don't know if you saw it, on saying management consultancy has no experience and are costing the state far too much, Caroline.
Oh, there you go. For our London
to the Fed minutes from this month's policy meeting.
President Biden rallies support for Ukraine and Eastern Europe as a fight for democracy.
And China calls ties with Russia solid as a rock.
A suspected tornado touched down in southern New Jersey, plus a suspect has been charged with a hate crime for burning a property line.
Yeah, this is your trade for today, I think, or this session at least. Should get nice, move down, hopefully. So they'll look on the lower time frame to see if we're getting anything. Yeah, it's a decent move. It's a decent move. Seeing some nice sell side coming in. So we should get that break.
Good morning, I'm Nathan Hager.
And I'm Karen Moscow. And U.S. stock index futures are little changed this morning. We check the markets all day long here on Bloomberg with S&P, Dow, and Nasdaq futures all little changed. 10-year Treasury up 1/32, yield 3.94%, and the yield on the 2-year 4.68%. Nathan.
Karen, stocks are coming off their worst day of the year. The S&P 500 opened up the holiday shortened trading week with a 2% decline, while the tech-heavy Nasdaq 100 fell 2.4%. Weak earnings and fears of more interest rate hikes from the Federal Reserve are weighing on equities. Goldman Sachs chief global equity strategist Peter Oppenheimer says U.S. stocks are now far less attractive.
The US equity market remains quite expensive, trading at over 18 times. That's quite a bit above its longer run average. Most other equity markets trade below their longer run averages, and that's true in Europe as well. The most extreme cases in the UK, which has been our preferred European market, was the best performing major index last year. We still think there's a lot of upside.
Goldman's Peter Oppenheimer spoke exclusively with Bloomberg from the Goldman Sachs Global Macro Conference Asia Pacific. Hear more of that interview in just a few minutes here on Bloomberg Daybreak.
Well, Nathan, we'll get more clues on the direction of interest rates when the Fed issues minutes from this month's policy meeting. And Bloomberg's Michael McKee has a preview.
The surprise is gone now that the presidents of the Cleveland and St. Louis Fed banks have said they saw a case for a half percentage point increase at the February 1st meeting. If there were a significant number of others who felt the same way, that could influence views of the Fed's next move, given the strong data we've seen since then. Moreover, at his post-meeting news conference, Fed Chair Jay Powell teased a discussion on the path forward for rates that we'd learn about when the minutes were released. What might have been said about how high rates will need to go, how fast, and for how long. A lot of that will depend on how Fed officials felt about the prospects for inflation, another discussion to watch in the minutes. Michael McKee, Bloomberg Daybreak.
All right, Mike, thanks. Turning to geopolitics, President Biden is wrapping up his trip through Eastern Europe, marking a year since Russia's invasion of Ukraine. He'll meet with leaders of the so-called Bucharest 9 nations that have aided Ukraine with weapons and refugee assistance. In a major speech in Warsaw, the president said Ukraine's fight has united the West.
President Putin is confronted with something today that he didn't think was possible a year ago. The democracy of the world
Such weak price action on crypto. Really isn't much to play around with.
That strength will be tested as the war continues.
So much of the speech sounded like we're already declaring victory, that, okay, we succeeded here. But the war is far from over. Russia's still recruiting people and throwing them at the front line. We have not given the Ukrainians the longest range munitions that they need. We've not given them any aircraft. There's a long way to go.
Former NATO ambassador Kurt Volker spoke with Washington correspondent Joe Matthew on Bloomberg Sound On. Catch the show weekdays at 5 p.m. Eastern on Bloomberg Radio or listen on demand wherever you get your podcasts.
Meanwhile, Nathan, China's top diplomat is calling relations with Russia, quote, solid as rock. Wang Yi was in Moscow to meet with the secretary of the Russian Security Council. And the high-level support might not end there. The Wall Street Journal is reporting Chinese President Xi Jinping is preparing to visit Moscow. We get more from Bloomberg's John Liu in Beijing.
At the end of last year, December 30th, Xi and President Putin did have a phone call, and during that phone call, President Putin did say to Xi Jinping that he looked forward to Xi visiting Moscow in the spring. So we've been looking for a visit of some sort. It has not been confirmed or acknowledged by the Chinese side.
By the way, guys, thank you for the follows, much appreciated. Thank you for the likes on the stream, also appreciated. Yeah, this is the short position that we're looking for. It's kind of It's come up. It's a nice level of resistance. Seeing some nice, that was a very nice sell side candle coming in. Just currently at this kind of concentration of orders, so it's going to hold a little bit of support, but hopefully we can kind of breach that 50 moving average and start moving towards kind of this structure. There's a little bit of well, that's where the real volume's being held at. So yeah, let's see how things kind of play out. But things are looking good. This also doesn't look too bad for a continuation to the downside. Those sellers are starting to come in.
It makes her the only major American bank CEO to get a bump in compensation for the year. According to a filing in her first full year atop the company, Fraser was granted stock awards totaling about $19.6 million, a cash bonus of $3.45 million, and $1.5 million in salary. The move comes after rivals Bank of America and Goldman Sachs cut CEO pay, while JP Morgan Chase and Wells Fargo left theirs unchanged. In New York, Charlie Pellet.
So as mentioned, we've come up, tested that level of resistance here. Yeah. So yeah, hopefully we can get that move back down. You know, look at gold. Gold doesn't look too bad either, to be fair. Continue its move down, maybe. Back down to this level of support. Come and retest it. I mean, it's already kind of tested this level, and we're still seeing weakness coming in. So, yeah, potential trade here. I think it would be worth taking.
Snow due to follow on some higher peaks later. The storm will then move east, where Minneapolis will take the brunt of the impact, getting 15 to 25 inches of snow through Thursday. The National Weather Service says then the historic storm will move up to New England, which may get up to 18 inches by Friday. In San Francisco, I'm Ed Baxter, Bloomberg Daybreak.
The NYPD has arrested a suspect after a pride flag was set on fire outside of a Manhattan restaurant in Soho. 30-year-old Angelina Kando was charged with hate crimes, including arson, mischief, and reckless endangerment. The flag, which read "Make America Gay Again," was set on fire early Monday at the Little Prince restaurant. Attorney Benjamin Crump says on behalf of civil rights leader Malcolm X's surviving daughters, he will file a notice of claim with intent to sue government agencies, including the FBI and the New York City Police Department, for fraudulent concealment of evidence in their brother's murder.
The truth of what happened and who was involved has always been critical.
Malcolm X was shot multiple times while preparing to speak in Washington Heights in 1965. Two men originally convicted of killing Malcolm X were exonerated more than 18 months ago. Global news 24 hours a day, powered by more than 2,700 journalists and analysts.
Coming back down.
120 countries.
Yeah.
Michael Barr, this is Bloomberg Nation.
Thank you, Michael. Time for the Bloomberg Sports Update.
This is looking good, though. Very weak buy side. Came and tested those moving averages, held us at resistance, so a nice reaction even on the lower time frame. So this is looking good. So we're going to take a short here.
To the Giants, it's clear they do not want to risk losing quarterback Daniel Jones to free agency. If they can't sign him to a long-term deal, they'd likely franchise him. If they do sign Jones, they could then franchise Saquon Barkley. Derek Carr
Okay, Euro Australian dollar starting to make a continuation back down. Hopefully, we'll see kind of how things kind of react here, but hopefully we can get a nice break of that 50. You are seeing some nice sell side coming in. So just got to be a little bit patient, let it play out. And hopefully we can get a nice trickle down. In terms of data, we're not getting much data today, so yeah. Shouldn't be expecting anything unexpected. Should be in the gods. Yeah, yeah, yep. Again, guys, I mean, if you just trade crypto, there isn't a great deal that's going to happen. Maybe continuation back down, really. Yeah, I'm going to see a little bit of volume coming in on the New York session. But until then, I mean, it's just going to build up structure here. It's very, very slow, very little volume on the follow through. It kind of just died off an hour or two ago. So there isn't a great deal that you can do. The action is elsewhere. Starting to move nicely.
Good morning, I'm Nathan Hager. If investors put their money overseas, they could see big returns from Asia. That's according to Peter Oppenheimer, the chief global equity strategist at Goldman Sachs. Oppenheimer spoke exclusively with Bloomberg's Annabelle Drewlers from the sidelines of Goldman's macro conference Asia Pacific. They discussed the outlook for U.S. and global equity markets, treasury bills, and where Peter Oppenheimer is looking for opportunity. Let's bring you part of that conversation now.
We just spoke there about the moves that we're seeing in treasury markets, but generally when you can get 5% on a T-bill risk-free at the moment, what does that tell you about the outlook for equities?
Well, overall, it tells you not particularly attractive. And it's a confusing picture in some ways because we, as a house, have been pretty optimistic about the global economic outlook, long expecting the US to avoid recession. We don't have recessions now forecast even in Europe, which was really at the epicenter of the risks last year with rising gas prices. But I would say two things. First of all, equity
markets have really, really, really died off, haven't they? Really died off. Just not a great deal of anything.
We've been preferring non-US markets for quite some time. We still do. But even then, in absolute terms, we think we're going to be relatively modest overall at the index level this year.
Modest returns overall. Where are you then looking to get the most alpha?
Well, I would say two things. Firstly, if you take all of the regions globally, we've got the highest return forecast in Asia. It's partly a valuation story and a recovery, the opening up of China. And secondly, I think you really need to look within and beneath the equity index level to really find better relative opportunities. Now, that's been the story already for much of the last year, where we found for the first time in more than a decade, valuation really mattered. Cheaper things outperformed. In the previous decade, generally, more expensive things were outperforming. And we think that will continue. So we like pockets of value in Europe, where I cover in particular. We've had a strong preference for banks, which have been a disastrous performing area for more than a decade, and over the last year have performed well. We think there's more to go there. We like energy and commodity-related sectors as well. And we sort of balance that with a preference for stable margin businesses across industries, and that's true globally.
When you talk about Europe outperforming the US, what exactly do you see driving that?
I would say it's a couple of things. First of all, valuation. The US equity market remains quite expensive, trading at over 18 times. That's quite a bit above its longer run average. Most other equity markets trade below their longer run averages, and that's true in Europe as well. the most extreme cases in the UK, which has been our preferred European market, was the best performing major index last year. We still think there's a lot of upside. That's partly because it's very cheap, and partly also
Right, okay. Really isn't much to touch on. This is obviously going to pull up a little bit. Yeah, shouldn't be expecting it to push too high. Maybe a 382. Can add a little bit more lots here if it does push up slightly to one of those fibs and go for the continuation back down. It's looking weak. It's got a decent amount of sell side on that move down. Just finding a little bit of support here. So yeah, we'll keep this one playing out. We'll keep the gold trade still playing out. And yeah, hopefully we can get some movement between now and the European close, really. Okay, so we should see some volume coming in on the New York Open. But yeah, we'll see. Again, guys, we shouldn't be expecting anything unexpected. The data has already come out. Okay, so yeah, let's see. We'll touch base on crypto on that New York session at the moment. I mean, just there's nothing happening whatsoever. It's just very, very slow movement. Getting a little bit more movement in the FX and commodity side. So yeah, you should see these develop relatively soon and be nicely in profit. So yeah, let's see. We'll touch base for the next live trading session on the New York Open. So come join us for that. Okay, that's at 2:30 UK time. You'll see us here again for that New York Open. But guys, as always, thank you very much for joining us. I can see some people are just joining now. This is the trade that we've taken. So feel free to join. We'll touch base with you all on that New York opening session. Thank you and take care. Cheers.